Nvidia stock, should you invest in it? Let's analyze Nvidia in detail. And this is not a financial advice. Nvidia isn't necessarily a household name, that is, unless you're a tech junkie. However, if you use technology at all, there's a strong chance you are an end user of the company's semiconductor products. The company is the inventor of the Graphics Processing Unit, or GPU, a computer chip that was designed to expand the capabilities of computers and game consoles to provide improved graphics for the end user. However, the GPU has gone far beyond what Nvidia probably ever expected it would. Today, the company's high-tech computer chips are used in various servers and data centers. Given the company's dominance in the data center space, chances are its chips are being used in the server that's feeding you the content you're reading right now. As technological innovation continues, GPUs are becoming increasingly important. Over the years, the company has proven that through continued innovation, its chips are likely to stay on top of the competition. Moving forward, these chips are going to become more ingrained in day-to-day life, playing important roles in the development of artificial intelligence, autonomous driving, and other technologies of the future. The stock may also be a great way to gain access to the crypto boom. Not only are investors diving into cryptocurrencies, the crypto community is investing heavily in non-fungible tokens, or NFTs, and interactive worlds to use them in. This trend is expected to significantly increase demand for GPUs and CPUs. Now might just be the perfect time to get involved. Nvidia completed a 4-for-1 stock split on July 20, 2021, when shareholders received 4 shares at a quarter of the current price in exchange for each single share they own. The move is far more than cosmetic. With the stock trading over $800 per share, access to the stock has been limited for those with less money to invest. The split effectively cut the price of each single share by 75%, bringing it down to around $200 and making it a more accessible price for investors with smaller portfolios. This move worked wonders, leading a rush in demand for the stock and resulting in a spike in value. Like most tech stocks, however, there has been a cool-off period recently, bringing the stock back down to a more attractive valuation. Not only is the company a pioneer in the high-end computer graphics and processing space, it continues to innovate, consistently staying one step ahead of the competition and making the stock one worth watching closely.